After jumping above $106 per barrel, oil prices have somewhat stabilized, sliding to the area of $105 per barrel. In fact, the market has been drifting around this level for more than a week as there are no major changes in the current world situation. In the meantime, market participants are awaiting the Federal Open Market Committee meeting to be held today. Much will depend on its outcome, or rather Federal Reserve Chair Jerome Powell's statement. If the head of the U.S. Central Bank comments on a recession and its scale, oil prices will most likely come under pressure and drop to $100 per barrel. After all, a deep and prolonged recession is bound to lead to a decrease in demand. Thus, expectations of a sharp slowdown in economic growth will cause lower energy prices. However, their decline is likely to be temporary, since an energy crunch the world is expected to face this autumn is almost inevitable. According to the trading chart, Brent crude oil futures have been moving in a range limited by the levels of $101.50 and $107.50 per barrel for over a week now. This reflects investor indecision and indicates an accumulation process. And in this situation, the best tactic is to trade with a view to breaking through one or another boundary of the sideways channel. Please keep in mind that a breakout will be confirmed only after the price stays firm, at least at the 4-hour chart. Gold is currently hovering around $1,725 per troy ounce in anticipation of the Fed meeting outcome. Traders have taken a wait-and-see approach, as indicated by the asset sideways movement near the $1,715 mark. If Jerome Powell announces the regulator's intention to stick to its aggressive rate hike path, gold prices will immediately go down, falling below $1,710 per troy ounce. Moreover, the way to $1,600 per troy ounce will open in this case. Otherwise, the yellow metal may post slight gains if the price consolidates above $1,728. However, its rally will be short-lived. The point is that rate hike cycles initiated by central banks of major economies around the world will continue to exert downward pressure on gold. Now let's consider the dynamics of the Russian currency. In addition to expectations of changes in the budget rule, which will allow the Ministry of Finance to carry out foreign exchange interventions, reduced gas supplies to Europe are weighing on the ruble. According to Gazprom, the Nord Stream first gas pipeline is operating at only 20% of its capacity. This may lead to a sharp drop in export revenue, while the country's current account surplus has been the main driving force behind the ruble's strength. Fears that Russia's current account surplus could shrink sharply supported the US dollar, which managed to rise above 60 rubles. Nevertheless, things may change at any moment, especially if the Ministry of Finance drags out its decision on foreign exchange interventions. Anyway, the current exchange rate of the ruble is pretty high and is clearly harmful to Russian businesses. In 4 trading days, the greenback added about 10% against the ruble. Speculative interest fueled by the news keeps pushing the boat up. However, it's difficult to predict how long this rally will last. At the moment, there is a likelihood that the dollar-ruble pair may advance to the high posted on July 6, which is just below the level of 64 rubles per dollar. From a technical point of view, the Russian ruble is still overbought, thus there is room to move even further to the downside. And that's all for now. We continue to learn developments on financial markets. Subscribe to our channel and follow news with us. See you soon!